Okay, I think we're live. Hello, friends, colleagues, enemies. Hope everyone's had a nice weekend. It's been nice and sunny here, so can't really complain. Also, if you were tricked by the clocks changing and thought the stream was like an hour earlier or later, now's the time to fess up. I almost fell for it, because we're in British summertime now, obviously. You can see we've moved on 1 hour ahead of UTC. So daily close at 1 a.m. now, not midnight. All my order in the world has been disrupted by this time zone shift. But I think somehow we will prevail. How's everyone doing? Hope all is manageable. Let me hit the old retweet on this boy. Okay, cool. We'll get started in a moment. We'll do the same thing we kind of did last week, which is give some time to discuss news, or at the very least, interesting stuff on my crypto radar, and then we'll look at charts, TA stuff, and all of that. Also, a quick thank you for reaching over, I think it's 17k subs. That's pretty cool. So your support is very much appreciated. Go ahead and click the like button and subscribe to the channel if you haven't already, and keep going on the righteous path to making a difference, hopefully, in crypto YouTube, although I'm not really betting on it, to be completely honest. Yeah, so, okay, cool. Assuming audio and video are okay, we can get going. Thank you to Blockfolio, the sponsor of Technical Roundup. You can go to blockfolio.com and download the mobile app for a feeless trading and asset swap experience. Be sure to check them out. And yeah, very quick note on the Blockfolio thing. Someone very reasonably mentioned that while, yes, it's true that the app is fee-free, both for trades and asset swaps, that obviously the fills they were getting were less competitive than it would be on FTX or Binance or whatever. Now, that just makes sense. Like, the cost of trading obviously moves somewhere. So, like, Robinhood, for example, sells your order flow, right? In this case, the fee-less aspect is to some extent priced into the spread. But the whole point is you're not trading futures or leveraged instruments or even short-term trading for the most part if you use something like a Blockfolio mobile app, right? There are no futures on there. It's for spot purchases, and generally speaking, for spot purchases for the kind of medium to long term, your exact entry isn't as important as it would be if you're trying to short-term trade. So, like, I'm not an idiot, obviously. If it's fee-less, then the cost of trading has obviously moved elsewhere. I just think given the use case for the app, it's an expected and a reasonable trade-off, right? Nothing's free in this world after all. The risks and the whatever other stuff just gets transferred from point A to point B. You know, we're very, like, cool and transparent with this kind of stuff, so if you guys have questions, just ask, I guess. Yeah, and I also hope you all had a chance to listen to the Technical Roundup podcast episode with Avi Fellman. That was really cool. That was really well received. I generally don't like podcasts and I'm not good at listening to them. I know that sounds like mad hypocritical, given I've kind of got one myself. It's like, oh, all the podcasts are bad except mine. Like, I appreciate how ridiculous that sounds. But generally speaking, there's just often way too much filler, and maybe the conversation doesn't flow as well, and people are bad at asking good questions to smart people. So as someone who's a podcast skeptic, kind of decided that if we were going to do something of that ilk, that it made sense to make it as valuable and as, I suppose, listenable as possible, right? So that's kind of what we do. We prepare our notes in advance with Donald, and then we just have our guests on and ask them meaningful questions. So if you haven't listened to that episode, it's really good. There's like trading alpha there, trade ideas, both macro and short term. Like, it's really good, and I hope you give that some time. It's very much worth your listen, in my opinion. So yeah, with all that said, there's some stuff I want to cover on the news side of things. So let's go over here, discuss, and open up a few of these. So the first one, I mean, this is just, again, on the more light-hearted, goodness me, side of things, that Miami-Dade commissioners approved crypto exchange's FTX bid to remain Miami Heat Sports Arena. I think it's going to be called the FTX Arena, and this is like a long-term deal as well. I think it's 9 years or something like that. Maybe even longer. But yeah, FTX Arena, the initial response was understandably positive, and then you had your normal kind of top things signals come out when this news came out. I didn't really think it's the case. Like, realistically, as someone who's generally pretty sensitive, or at least pays attention to the whole top signals thing and sentiment, those sorts of feelings have been floating around crypto Twitter since even before 17K, right? Like, on the road to all-time high, a lot of the just top things, sentiment top, everyone's euphoric, those almost empty platitudes, they've been around for a very, very long time. And trading off of those alone just doesn't make any sense. Another issue to consider is that a lot of the top signal arguments that are emerging are essentially analogies to 2017 top signals. Now, for that reasoning, in my opinion, to be valid, you'd need to be in a similar market cycle now to the one in 2017 for those same signals to have the same or similar weight, right? But it should come as no secret or no great surprise that the present market structure and just this trend as a whole is completely different from 2017. I appreciate the irony of this time it's different, but there are marked and significant differences in terms of the type of traders and participants getting involved in this rally, their risk appetites, their holding periods, the sizes they trade. Like, it's a very different market in terms of participants, in terms of market structure, etc., than what we had in 2017 retail mania. If you listen to the podcast episode, for example, it's almost the reverse of 2017, where you kind of have retail elsewhere, you know, maybe NFTs, GameStop, Wall Street Bets, etc., while the institutions are the ones being more active in crypto. Whereas in 2017, it was kind of just retail only, just at different phases. So I suppose that's a very long-winded way of saying it'll become very difficult to distinguish between quote-unquote top things and adoption. I very much think that the current news cycle is more on the adoption side of things. And even if And accordingly, right, if we're in a different cycle, the top things for this cycle will necessarily have to be magnitudes greater than the top things in the 2017 cycle, right? I don't know what those things look like, but I just think having a sense of relative scale is probably pretty useful going forward. Because again, some of the stuff that would have been unimaginable in 2017, we've had at much, much lower prices, and it didn't serve as any kind of market top in any way, right? So just some food for thought. I expect to see more stuff like this, and I wouldn't necessarily run away from it. I mean, obviously, pay yourself and take risk off the table where appropriate, etc. You know, if you make life-changing money, change your life. But almost hunting for top signals has just simply not been a profitable or worthwhile endeavor for the past however long it's been, right? So that's just a quick take on that sort of mainstream reaching crypto developments. Some other stuff you can see by the title. I will get to the Visa stuff in a second. I'm sure you've seen this. I think 80 billion was the notional position size or something like that. With this massive liquidation in traditional markets, just like a massive margin call. And you can see Nomura, Credit Suisse, these banks are facing billions of dollars in losses after a US hedge fund, Archegos Capital, defaulted on margin calls, right? And again, almost no different to crypto to some extent. You know, you get a call like, hey, give us more cash or collateral for your positions. Oh, you can't because you're bankrupt. Well, then we have to forcibly sell these positions and at a loss, obviously. Especially when you have so much selling, given the notional amounts we're dealing with, and it all kind of has to be done in a somewhat orderly fashion. This is what you get, right? I saw some commentary suggesting that this is going to almost have like a contagion effect to the rest of the market. I'm not sure there's fantastic evidence for that. It seems reasonably contained, and someone linked earlier some analysis suggesting that most of the selling, the outstanding selling, was done. So big margin call. The prime brokers lose a lot of money. The family offers defaults, but this doesn't seem like a market-wide meltdown type of scenario. And as you can see, Dennis Dick from Bright Trading LLC seems to agree. Mike here in the chat says 15 to 18 billion is nothing in the financial system. I mean, yeah. I agree with financial broader impact appears to be limited, but it's still pretty crazy to see these massive liquidations happen like in traditional finance. Like, I wonder, I'd love to be a kind of fly on the wall in the risk manager's office or whatever to kind of see how that conversation went down. It's FT. I wonder why did I bookmark this? Any new facts there? Yeah, so again, fire sale of 20 billion of Chinese and US stocks. Capital has forced a huge unwinding of positions. Banks take the hit as the prime brokers. Obviously, bank shares going down as a result, given the profit gets eaten into from those losses as well. But I wonder if there's anything else interesting here. No, that's kind of it. I just thought it was interesting to see these huge liquidations, like big margin calls in traditional finance as well, and generally the attention that hedge funds or family offices, whatever, have been receiving ever since the GameStop stuff. I wonder whether that trend is going to persist. But the main reason I brought this up was to discuss, entertaining crypto analogies with massive liquidations. Funny to see that it happens in the real world. But also B, I don't see an argument for this being some big chain of events, butterfly effect type of trigger. It seems pretty well contained, and if what I read earlier is correct, then most of the selling and the blocks of selling of those shares specifically seems to be complete. The only interesting, perhaps, final point is I don't know whether this and the GameStop stuff and just generally all the bad and negative press for hedge funds, etc., is going to spurn any type of regulation or further regulation. That would be interesting, but again, nothing too busy on that side of things. I just thought it'd be cool and interesting to bring up. This is the spicy one, right? So you can see, let me show you a very rare specimen. It has been becoming increasingly extinct, and the exact number of species left in the wilderness is unknown. But this is what you call a green daily candle in ETH BTC. It doesn't happen. I mean, we are very lucky to be witnessing this, right? So as a result, it won't hurt to look into some of the context surrounding ETH outperforming Bitcoin today. And it should come as no surprise that it's this, what I've called the Visa news, even though it's more USDC news than it is Ethereum news, right? So if you were to read kind of Twitter this morning on a scroll basis, you know what I mean by scroll basis, right? When you just don't pay attention and you're like skim reading as you flick past the screen, you'd probably interpret the news as some sort of Ethereum adoption, Visa, crypto payments, whatever type of general jargon, right? Which is cool. And I think this trend is one that's been around for a while, ever since PayPal just took the big step to quote unquote adopt crypto as a payment mechanism. And then out of the big kind of payments networks, MasterCard is slightly behind, Visa's a bit more proactive, but this news in itself is like a bit of a nothing burger, in my opinion, right? And I share the sentiments of my learned friend Nomad, who essentially said centralized service partners with another centralized service to trial issuing centralized stablecoin through yet another centralized service to settle. Now, obviously, this is like a kind of quintessential Nomad hot take sort of thing, but factually, that's more or less correct, right? So if we look at what is this news? What does it mean between the lines? So there's actually a very specific set of facts surrounding what this is, right? So And again, Alex says, yes, so what if this is a scam pump? I agree, it doesn't matter. I'm not saying, well, the news isn't what it appears, therefore you should sell the market. That's not the point at all. Like, I don't believe in kind of efficient markets hypothesis or whatever, and I'm never going to argue that, oh no, unless it's really clear that the market's just blatantly misunderstood something or relied on something that's false. If the market wants to pump because of news, it's going to pump because of news. I'm not going to fade it simply because I think it's less important than the market seems to be pricing it. I'm not going to sit here and say the market's wrong to react to X in such a way, unless I've got really, really good reason for doing so. This isn't one of those cases. I think this is just one of the bland examples where the reality is slightly, or in this case, somewhat meaningfully less interesting than the headlines. So the basic facts are the following, right? So USDC stablecoin. Crypto.com has a card, right? Like a crypto credit card thing. That crypto card uses the Visa network. It's a Visa card, right? So as a result of that partnership between Crypto.com and Visa, they obviously have to give Visa some sort of money, right? Cover its obligations. It's got cash obligations to Visa. And normally the way Crypto.com has adhered to that contract is by selling crypto, getting cash, and giving that cash to Visa as part of their partnership. But now what they've done is they've essentially settled that payment via a USDC stablecoin. And I mean, that's it, right? If I understand also correctly, Visa's got an Ethereum address at Anchorage. Right, here we go. Stablecoin on Ethereum to an account at Anchorage custody under Visa's name. So you essentially have, right? You've got Visa here. They're in a partnership with Crypto.com, and then Visa's bank is Anchorage, which has an Ethereum address, right? ERC20. And so basically what this entire deal is instead of Crypto.com just giving cash to Visa as part of their agreement, they are giving USDC, which is ERC20, to Visa's bank, Anchorage, to settle that same payment. I mean, that's literally it, right? So, I mean, what are you going to do? Are you going to, and also USDC uses the Ethereum blockchain, right? But the Ethereum side of things doesn't really matter. I suppose the headline is basically something that used to be paid in cash is now paid in USDC. That's it, right? And for now, I mean, look, as this article by CoinDesk says, Visa's generally pretty proactive in terms of integrating with crypto, and, you know, they have several partnerships, and they want to, I think in this article, it talks a bit about the future. Hold on. Visa's plans. Yeah, Visa hopes to launch USD settlement capability for other partners as well in the year ahead. So again, this is a single partnership case with Crypto.com. It's not like they're just suddenly accepting USDC payments for everything. It seems to be a pilot program just with Crypto.com, using Visa's specific Ethereum address bank account thing at Anchorage. Now, again, this is like an open platform. Am I being unreasonable? But I just think this is a bit of a nothing burger in terms of news. There are two companies, right? Crypto.com has a commercial relationship and agreement with Visa, and now instead of giving them cash to keep the Crypto.com Visa card, they have a pilot program where they give them USDC via their bank, and that's it. What do you think? Like that? I'm not saying that means the news is bad or you should short, etc. I'm just thinking like this is boring as fuck. It doesn't mean anything. It's not as groundbreaking as at least my naive self thought that the headlines were. Big whoop, yeah. We should buy more USDC. It might pump. Yeah, I'm very bullish USDC. Target 1, $1.5. Target 2, $2. Title of article is clickbait to some extent. I mean, now settles payments in USDC. Oh, I mean, kind of. I see what you mean, right? I see what you mean. You're like, oh, well, I can just send my USDC to Visa now. No, you can't. Visa has a specific pilot with one company for an existing commercial relationship. You can't do shit about Visa and USDC yet. So yeah, that's my quick take on the Visa thing. It's cool. Visa generally has got a decent track record with crypto adoption, quote unquote. But this kind of is whatever. I don't think it's as cool as it sounds. But I will never complain about an Ethereum pump. Let me get that out of the way as well. Stop trashing the news, the market's plummeting. And yeah, earlier this month, CEO Alfred Kelly said the company aims to cover Bitcoin and other cryptocurrencies along with stablecoins. So it's like, I'm not bashing it, right? It's a pilot. It's a pilot program and they want to expand, but like, I'm just saying this news in itself is sort of whatever. And a lot of the headlines, I'm not saying they're clickbait or whatever. It's just not as, the implications aren't as wide reaching, and this Visa USDC isn't accessible to most people, right? It's just one partner for the time being, and we'll kind of see where it goes. It's certainly not like a retail-oriented thing either, for now. But, I mean, as someone who's dealt with crypto and banking, any impetus for reduced hostility between the two, I'm super grateful for. I'm sure you all have your own pain-in-the-ass stories about crypto, bank accounts, buying crypto, cashing out. It's just not nice. So, yeah, that's the Visa news, so-called Visa news, and we'll see where that lands us. Okay, that's kind of all I've got for news side of things. Hope it was decently reasonable or interesting. I know it's a bit kind of flat, deadpan-y, whatever, but I'll just tell you what I think, right? And that's sort of the most decent thing I can do on this channel when it comes to the news. Funny random username says, most crypto has no real-world application yet, but this is a real-world application. I don't know. I disagree with the base premise that there's no real-world application. Okay, cool. Let's talk markets. So we'll start with Bitcoin. Numbers been going up, which is good. The couple of areas that I'm interested in as before. So the first is this range high, all-time high candle thing that I'm sure you all remember from last week, essentially. And that's we had your breakdown, retest, low made, and now we're back into this area again. This isn't a level of resistance that I'm interested in selling, to be completely honest with you. I think you can make reasonable arguments to de-risk in one way or another as we come back to retest both this level, but also just the origin of where this leg came from. So where we are right now is resistance, right? To be clear. We had this leg down. Okay, and whenever you see these sorts of impulsive moves, especially if they happen to break support and or break market structure, you can get some pretty good support resistance levels by just looking at where that breakdown came from and just boxing out that consolidation, demand zone, whatever you want to call it, right? So yeah, the market's at resistance right now, but just for me, generally speaking, it's not a level that I'm hugely interested in selling in terms of my own behavior. Like, I don't think it's a good long right into resistance towards the high of day, but I'm not interested in managing anything into this level either. And just my general expectation that as long as the market is strong and the underlying trend is up, bull market, whatever, I'm not going to be selling much of resistance levels, but certainly not on like the first, not on the subsequent tests, right? So in this case, if you were going to sell this level, it'll probably be, if you got lucky, during this day here, right? Once it broke down, you got the retest and you caught like a couple of days of downside, but even then, that's already been immediately engulfed. So, you know, there's someone snapping at the heels of this thing and it doesn't seem to scream bearishness, right? So I've just been doing nothing, to be completely honest with you. Like, I've almost been counter trading myself in a way, because I've seen some of these candles, like for example, this close here, I was like, oh, maybe I should just hedge and wait for price to reach support or whatever. But I didn't, and didn't see like a massively compelling case for doing so, and not much else happened, right? In the same vein, I got a similar hedge type of signal when price retested that same underside level on this daily close here. But in the same vein, I more or less ignored it. It just didn't look weak. I simply didn't want to reduce my exposure heading into the start of the week and, you know, number go up. So I'm pretty, you could call it complacent, but I'm just going to say passive when it comes to Bitcoin right now. I appreciate that it's at daily resistance now, so certainly no new leveraged future longs for me with where the market is right now from a technical point of view. But just generally speaking, I'm pretty all right with how it looks. I think the bullish case, understandably, will just become, like, as in by bullish case, I mean new all-time highs. The only obstacle, and I'm sure you'll remember we did a video on this, or a live stream on this at another time, saying obstacles between now and all-time high or something like that. We more or less have the same as before, right? If we take this top range, highest close, or generally, if you want to take a few more liberties, just this consolidation before the breakdown, I think a daily close through there will probably send us towards all-time high and beyond. Fairly straightforward. So right now, we're retesting the kind of origin of the drop. That's resistance. I'm not opening longs into here. As for all-time high, I think any daily closes through this level, basically reducing the case of this being some sort of lower high. I think daily close through there, and there's really not much in the way when it comes to technical resistance before new all-time highs. So that's kind of it. The nearest level of support is probably, again, the bottom of this daily range, and the more recent version of that is old support, this little support resistance flippy boy at around mid 55s. If we get a dip, that's probably the first or nearest area to look for some sort of reaction at least. But I'm just trying to not lose my shit generally when it comes to this consolidation. My general expectation is that dips will be bought and resistance will be broken, and I'm waiting for that to come to fruition in one way or another. And again, I mentioned ignoring hedge signals. I said that there was one on the close below here, which I ignored, and I got the second one wrong. The other one I got, which I also ignored, was actually this one. This daily cluster here, with the daily close taking place below the level. Now, this is one that it kind of made sense to ignore, because again, the close wasn't massively impulsive, and also the market was into this prior area of highs here, so it's kind of closing into support. It's not comfortable, but in the same vein, again, it looks like a bearish. You look like what looks like a bearish close. Let me try again. You get what looks like a bearish close, the market just starts rallying once again. So, you know, I made a real effort to come up with some sort of Bitcoin hot take. Not really, but, you know, come up with something interesting when it came to BTC USD analysis. But for me, there's really not a whole lot. Dips have been bought. We're back towards kind of logical resistance, but it's not a logical resistance that I want to sell particularly. And if I get a dip, that'll be cool. If not, that's fine as well. I haven't been really messing with my exposure. The 4 hour shows this decent market structure reversal setup that we've discussed previously, where you've got high, low, lower high, lower low, lower high, lower low, right? And so on this rally, you'd expect on this rally, you would expect a lower high to form somewhere relative to the last one, but instead the market smashes through it. So that's your market structure kind of reversal setup. I'm sure you've seen it a million times. Lower high into lower low, and then instead of a lower high, you get a higher high, right? And that's when you look for dips, basically, or that's when some meaningful evidence of reversal emerges. Are we more bullish or bearish on the chart? Generally bullish. Right now, it's at resistance, if that makes sense. So taking that market structure context into mind, where is that lower high type of level? Well, it's sort of around here, right? If we take some liberties, I think 55-ish is generally what you want to hold for the most bullish version of this pattern playing out, right? When you get this, and instead of a lower high, you get the impulse, you'd usually want a slight kind of hook back to the old high before continuation higher. So that would be something reasonable, in my view at least. But yeah, honestly, daily, as I said, right now it's at resistance, but it's not a level that I'm screaming to sell. Doesn't make sense for me personally. If I get a dip into 55-ish, 54, 55, I'll see if a setup materializes for me in that case. But yeah, that's about it. SK says, you don't want to sell, you mean to short? Yeah, I don't want to short it. I don't want to short it, I don't want to hedge it. I mean, I'll let it do its thing, but it's not a level. This isn't the type of market or conditions for me where I look to get particularly active at levels of resistance. Hey man, I see people calling Bitcoin to 400,000. Nice. But when I look at options for end of year, most calls are at 64k. What do you think, boss? I'm not really good at end of year targets. Options flow, I think, is cool, but a lot of people misuse it, and I'm not an expert myself to be able to give learned opinions on that. I think for a lot of people, the whatever several 100k target is an expression of gold market cap. So if we're currently at around 1 trillion market cap, I guess we can use like an FTA version of market cap if we're just going to make things up. Like say, okay, well, the next target is 1.5 trillion, then 2 trillion, whatever. I think that generally speaking, the prevailing theme is that price discovery, new asset class going from 0 to 1 trillion in unprecedented time, etc., etc., it doesn't lend itself well to making very easy or very reasonable price projections and predictions, right? It's inherently difficult. So I kind of abstain for the time being and almost kind of trend follow, if that makes sense. I want to see if I missed anything. The only other thing is, before the next stream, I think that the bullish case would be more or less solidified if we get a weekly close back above this prior range highest close here. So you can see what I mean by the market being at resistance where we are right now, both on the daily time frame, also to some extent on the weekly time frame. It got bid up pretty substantially, pulling back from this level, and it's back now. So again, at resistance, not one I want to manage into generally. If you're waiting for quote-unquote confirmation as a trigger on a slightly delayed basis, weekly close above that would probably be the way to go in that regard. I think that's all I've got. Do you take into consideration market opens into your setups? Loosely. Like, if I'm trading at a really dead time in the middle of nowhere and tape is just super slow, etc., I'll be aware of that. But generally speaking, mostly by coincidence, my short-term stuff tends to land kind of between London and New York. Just late morning to early afternoon UTC time. So I guess I somewhat pay attention to market opens, but not in a very strict sense. So yeah, that's Bitcoin. I'm not buying resistance, but I'm not selling it either. And that's all I've got. Do I use funding rate and open interest when trading? Loosely. Yeah. ETH. I think it's in a pretty similar boat to Bitcoin. I know it pumped harder. But structurally speaking, it's, again, at like resistance right now, and that resistance is the same as we had for Bitcoin, where you see a big leg down which breaks market structure, you work backwards and see where did that come from, and the sort of range or consolidation that forms prior to those sorts of market structure shifting breakdowns, you tend to get some pretty reasonable levels coming from those. So again, in a similar vein, daily close through this consolidation, probably towards the high and this kind of weekly area here. But generally speaking, it's, I mean, fine, right? I mean, it's choppy, but as I've said before, as much as I appreciate the daily structures that are available, if you want to trade like an impulsive, likely multi-week trend, the range needs to break, right? And that range for me is defined by range low at 1400, and then range high up here at whatever this is. I think this is around 1800. So that's it, right? If you want your multi-week kind of big candle trading period, then one of these boundaries has to go. Because the market's bullish, I'm going to assume it's going to be the range high, but that doesn't mean I'm going to buy into it, as in long resistance. I know some people trade that, as in they will literally have a setup where they buy resistance in anticipation of the break. But as someone who's tried to make that a feature, I mean, I've literally tried that. I tried to make a setup, probably, I think it was like 2 years ago, that would allow me to buy resistance when I thought a breakout was super likely, or sell support when I thought a breakdown was super likely. And I just lost money. Couldn't do it. Couldn't make it work for me. So I avoid it. But you can see that the general theme is that Bitcoin ETH, good rallies. Those rallies are at weekly/daily resistance. But the context is such that I personally am not going to make decisions or de-risk into those levels, as poorly as that may age. Do you only buy after breakout? No. Or would you buy bottom? Oh, you mean ETH? Yeah, honestly, the way I could see ETH playing out from a higher time frame point of view is it's very unlikely that I get something, unless it's really low time frame, that allows me to capitalize on the range high breakout. But it'd very likely be the case that after the event, once we're trading here, that's where I'll get some bread, so to speak. My system doesn't cater amazingly well to the trend forming legs or breakouts, but once those events happen, like once market structure breaks or once a range breaks out, etc., I won't catch the impulse, but almost anything that follows tends to be pretty accommodating, whatever, in terms of my own personal trading. ETH BTC, still kind of at life support-ish. So you'll recall from a market structure point of view, it pulled back to kind of the only level that it had left in the form of this high here. And it's sort of holding-ish, arguably acting, the top side of it acting as resistance, right? Even if we ignore that market structure level and look at like very recent levels where this was support, it's now being retested as resistance. So ETH BTC is like, ever since, basically it's been bearish ever since this failed breakout here took place, right? We had this massive weekly range high, broke above it, did nothing, and it's just been mostly red candles since then. I think you can get a moderate / short-term bull case going if it closes back above this high and kind of flips this level in doing so at 31s. I think you can have a moderately bullish case kind of from A to B in that instance. But I think a macro bullish case will only emerge back above the weekly range high at 36s. But generally speaking, this isn't quite yet doing things which are suggestive of strength. And there are also quote-unquote fundamental problems, or at least narratives, which aren't entirely favorable for ETH. Like Binance Smart Chain has had a lot of sticking power, even as DeFi has slowed down. So that's eating ETH's lunch to some extent. ETH competitors that we spoke about with Avi on the podcast, they also seem to be gaining market share, popularity, at the very least a lot of volume being traded through them, Solana being the example that comes to mind. So it's not the easiest time for ETH, I still wouldn't bet against it by any means. I think its network effects are really, really strong. I think most of DeFi that's actually used and has meaningful TVL still uses Ethereum. You may have read this morning there was some amazing news about Visa using Ethereum. Sorry, that last one wasn't fair. But yeah, it needs to do some, like, I'm not bearish ETH as a network, but from a TA whatever point of view, I need ETH BTC to start looking better before I start allocating towards it, if that makes sense. So the ETH BTC TA hasn't been nice, and we also know from a narrative point of view, there's certainly been some heat from competitors and all that other stuff. Last October, good memory, you and Donald said you would do a drunk stream one day. When can we expect that? I honestly don't know. I don't know. Good question. I'm not even sure if people will be interested in that kind of thing, but... Do you trade with limits or market when your conditions are met? Limits for the most part, but sometimes I'll chase with limit orders. Speaking of DeFi, where are you? Yeah. So the market was waiting on Uni v3 to some extent. I understand the argument that it's been announced like a million times it was priced in. Like, a lot of DeFi looks like this. And by that I mean you had previous support that's currently being retested from the underside, right? So I think a lot of charts will look way better if this week ends up being green. So even Uni on the weekly perspective, you'd be forgiven for thinking that this is like an area of weekly resistance based on this previous range high, right? That makes sense, at least to me. You've got the breakout level, you've got the break above it, and then the close below, and arguably or likely resistance in its current form on the weekly time frame. And the same on the daily, right? You essentially see that just with more candles. You've got the breakout level. I mean, you could even, maybe we take some liberties and just draw the support side and not the resistance side, given it's more recent. So we have this, right? But we also know it's like an area of prior highs, where we've got highs, lows, news comes out, gets sold into breakdown, and now coming in to retest it from the underside. So we'll see with a few of these other examples. I think generally speaking, if these underside levels get meaningfully reclaimed, and by that I mean like a strong daily close with real evidence of imbalance through this level, then new highs don't seem too unreasonable as a DeFi target. And again, some of these pullbacks have been pretty steep, right? Even in kind of relative terms, it may not look like it. We talk about Bitcoin, 30-40% bull market pullback, and we'll shit the bed when that kind of stuff happens, which is understandable. But I mean, this is a 30% pullback, for example. So if this market's bullish, I mean, I know altcoins travel more than that. So if you expect 30 to 40 in Bitcoin, you normally get a correspondingly higher amount in altcoins. But like for the most part, this thing is pulled back. If it's bullish, it needs to reclaim stuff. In this case, stuff is more or less this 30 prior support turned resistance. Then you play it to the range high and beyond. But this is kind of what Avi was talking about on the podcast, so I'm going to keep shilling it because it was really good. When it comes to asymmetry, right? Like, let's say you're bullish Uni above 30, and price is at, like, above 30, 31, whatever, and price is at 29. And you think, well, 29 is a good price. If I'm bullish above 30, maybe 29 is even a discount I can buy at to catch the upside potential left by a move or triggered by a move above 30. But again, the trade only becomes, the real asymmetry kicks in not into the level where you actually have significant risk to the downside if you buy a resistance, but a lot of it is like what unlocks the upside potential is the break of resistance, not a retest of resistance, right? So it's not the fact that the market's here, which means you have the highs vulnerable. It's if it breaks that, then the idea becomes valid to go towards the highs. Now, it's a matter of percentages, right? Like, you're essentially saying that below resistance where price is right now is like blue box, and then the entry above resistance is pink box. Now, the whole kind of trick is that while in absolute terms, these look almost indistinguishable, especially if you're targeting this and then the all-time high and beyond. But in terms of probability, trading above or through the pink box is significantly better than trading into the blue box. Like, it's the difference between buying the break of resistance and buying resistance. And those are two different trades entirely, which offer two different probabilities, despite the fact that in percentage terms or relative terms, they're just so damn close to each other. Does that make sense? So that's sort of what I'm paying attention to. For a few of these, are they slightly less clear in terms of... I mean, this is making lower highs and lower lows for the time being, but it's range low level held as support. So from a market structure point of view, we know that we like when a higher high is made, right? So in this case, basically above, what is that? 450, 460. It sort of needs to break something to be bullish. I'm very cautious when price starts kind of drifting with bearish market structure, and you end up buying the dips in the middle of nowhere. Those kind of setups have gotten me screwed in the past. So I either need to be acting like at the extremes at the range low, or when market structure tells me that things look a bit different. So we've got the bounce from the range low, that's good. Now a higher high, and then all-time high plus looks vulnerable. And that's really the good thing with trading a lot of the DeFi pairs, or just instruments which are generally pretty close to all-time high, is that the risk-reward becomes, like, the calculation changes. Because typically you'd say, well, this is resistance, and this is the range high, target, whatever. So any trade I take in this range, I need to consider this as a sticking point, trouble area, whatever. But when you're trading in the context of this being an all-time high, the chances of an all-time high being resistance are, in my view, significantly lower than a quote-unquote normal level acting as resistance, right? So when you kind of factor that into your risk-reward calculations, suddenly your target isn't 520, it's, 550 or 600 or whatever, all-time high and beyond. So that's why paying up for an entry when the market's trading close to all-time high is actually tends to be a pretty good trade, because the all-time high, if you're correct, is very rarely going to be resistance, and as a result you get to catch the extension that happens through it with all this extra R if you're correct. Does that make sense? I think Kevin seems to get it, but that's at least how I view the all-time high trading sort of deal. Yeah, again, a lot of these DeFi pairs look similar. You've got previous highs, turn to lows, and those are currently being retested. If you see a flip at those levels, you probably have some room to play, but otherwise that's more or less where the risk is, so to speak. Yeah. Comp as well, right? High, low, lower high, lower low. So you gotta be careful, right? In these cases, you gotta be careful, because the conditions are obviously quite different here than they were here. So paying up for an entry doesn't mean your entry is worse if the probability benefit is significant. YFI, it's a bit of a cursed chart, to be completely honest with you. You have to realize a lot of DeFi just straight up mega mooned in this period, while YFI did close to nothing. I think we discussed a similar level at 38.1, 38.2, which offered some false hope, but broke back below it here. Yeah, I'm hard pressed to come to strong conclusions when it comes to something that looks like this. Doesn't even almost doesn't look like a lot of the DeFi coins. And we talked about BTC at the beginning of the stream. What do you think about Web 3.0 being the next bubble avec NFT and DeFi for this bull run? Yeah, it seems to be moving in that direction. But I don't think we'll move away from high caps discussion quite so soon. I still think Bitcoin, ETH competitors are going to be at the forefront of a lot of the stuff we'll be talking about for the weeks to come. When determining highs or lows on swings, do you typically use bodies or wicks? Bodies for the most part, to be completely honest with you. Unit bias against YFI? Yeah, very much could be, Ryan. Do I have thoughts on curve? I don't know. I mean, looks pretty good, right? All things considered. I mean, BTC pair at resistance. So that's worth being aware of. USD pair's already up 8% into probably like the last resistance you're ever going to get on the chart. At least right now. So I wouldn't buy it right here personally. I mean, I can't. But it looks fine. Do you think a digital silver narrative is possible for Litecoin? No, I don't, actually. I don't. And the only reason I say that is because that's the narrative that I've been hearing for years now. But when it comes to innovation, thing is, I just don't believe you can a priori establish yourself as a digital silver unless you have specific properties or track record or investors treating you in that way that would suggest that narrative is being embraced. And if we just look at Litecoin, I don't see great evidence of that. Like, I know the analogy fits very well in terms of the fundamentals. Like, oh, it's like a test net for Bitcoin. And, you know, I think SegWit came to... I think it's either SegWit or Lightning. I'm messing up my facts. Was kind of trialed and came to Litecoin before it came to Bitcoin. So I understand the natural fit of Litecoin in that role, but the market doesn't seem to agree. Rook. We can take a look at Rook. Keep a DAO. What do we say about this? I don't remember, to be honest. I mean, here we go. We can just have this. I mean, look, again, with charts that when the chart looks like this, you kind of have to take your TA with a grain of salt to some extent. Because you just don't have a lot of history to deal with. Ledger status cursed Rook. Poor Ledger. Oh, man. Here we go. We can just do this, right? Just come back to first principles. You've got a range low at 352. You've got a range high at 398. In the short term, if you want to trade this, if you reclaim A, there's more or less a clear path towards B. But I think for something that looks like this, which has been poking and making new lows and hasn't reclaimed anything yet, being cautious just makes a ton of sense. Because God knows where the bottom is, right? I mean, this isn't a bad candidate, but it needs to do something to prove that that's the case. And the limited price action obviously makes me quite nervous as well. If you look at the 1 hour Rook, you can see the Darth Maul from today. From today? Oh, these? Yeah. I'm going to go out on a whim and say that there aren't a ton of humans trading Rook perp. Just a guess. I think we've all been there before, right? Have you ever traded like a slightly more obscure alt perp on FTX and you just think that there are no humans in this order book right now? Algo perp. Hope there's a good reason to look at algo perp. Well, it's going up. That's some reason. It's getting pretty close to a really good SR flip, which would be retracing that same breakdown we talked about, right? Like you had your big impulse move, support, breakdown, and spin resistance ever since. So if you flip that, then we come back to that same old example we talked about where, yes, technically you've got resistance at the high, but because it's an all-time high, you're targeting at least $2, in my opinion. So that's a good shout from the chat. I always like when you guys give me interesting charts. In this instance, it's at resistance now. I think daily close through here. The high looks vulnerable, and $2 is probably next. That looks interesting. It's a bit like Bitcoin, right? You could see that the high is vulnerable, but you don't buy resistance, or at least I don't buy resistance. Thoughts on USDC perp? Well, as you can see, USDC bought Ethereum as the, I read the news this morning. I'm an informed citizen. USDC bought Ethereum, and now Ethereum runs on USDC. So bullish USDC. Target one, $1.05, then $1.10, and then $2 by the end of the year. USDC to the moon. Yeah, I agree, Dylan. Just so bullish. Stink bids. Yeah. Oh, and speaking of ETH competitors, in my Sam Coins section, Solana has been all over the Twitter feed, understandably, given its all-time high break. So that's, generally speaking, you have a big range, right? And price starts to break from that range, value area, whatever. For the most part, you don't want to see pronounced pullbacks. You don't want to see it close back within the range. If it's a real breakout, or if it's a good breakout, especially having spent, at least in altcoin terms, this long consolidating, you really don't want to see it come back. If it starts coming back, I mean, kind of a red flag. Generally speaking, if the breakout's good to go, it should just be good to go. Like, you could arguably pray for a wick back into the top of the range, but if the breakout's as significant as it appears to be, it shouldn't really be coming back. That's why a lot of the time you want to trade within the consolidation, because if it goes beyond it, then defining your risks becomes really tricky, and coming back is a red flag in itself. Can you talk about the Sol USDT breakout, but still under BTC resistance? Yeah, I can see it. I don't tend to love structures that look like this. I know that's not very helpful, but just generally speaking, I try to avoid it. I like to get context from the BTC pair, as you've pointed out. Like, for the most part, when the technicals on one pair are really, really clear, and the technicals on the other pair aren't, or at least just don't compare, I like to just pay attention to the one which makes the most sense. So in this case, you've had how long is this range? Hold on. I mean, we can just take it roughly. Right, couple of weeks, breakout, you just don't want to see it come back. And if it does come back, it should really be in the form of a very, very quick short-term wick that gets bought up before moving higher. Generally, you don't want to see your breakouts come back. Especially on altcoins, man. So just to recap, very briefly, on where we're at. Market's up, which is good. Bitcoin in an area of resistance, but one which I think will roll over sooner rather than later. It's not one that I'm going to leverage buy, given we're retesting the origin of the breakdown. So no fresh positions for me in here, but it's not a level that I'm going to hedge into or de-risk generally. So resistance, expectation for it to break this week. If it wants to dip into prior levels at around 55, if the stars align, I'll look to position. But I'm fully exposed to the market as is right now. ETH, in a fairly similar vein to Bitcoin, it's retesting short-term daily resistance in the form of the origin of the breakdown at around 1800. Generally speaking, I expect this whole consolidation to resolve to the upside, and the clearest triggers for ETH would be a weekly close above 1930s. As for pullback levels, I mean, the closest one is this 1700 underside, but if we're talking bigger dips, 1600, although that would be a weird retrace, all things considered. Bitcoin being still slightly clearer than ETH, in my opinion. On that note, very quickly, ETH BTC summary, green candle, but still needs to do more to fix this, structurally speaking. I think a weekly close back above this underside at 31s will be a good start to potentially move towards the range high. But TA aside, I think ETH just needs to shake off some of the more difficult narrative pressures that are currently being exerted upon it via its lower fee competitors. On the altcoin side of things, DeFi catching a bid, which is cool, but I think the higher probability entries will emerge during the course of this week when and if a lot of these underside retests fail on the bearish side and look bullish instead. So looking for underside resistance flips on DeFi pairs to add some risk in that type of context. So oddly enough, kind of everything is at resistance, but I don't have a compelling case for selling it or de-risking into it in my own personal opinion. If you do, I think it's a justified place to do so. If there's like any risk to the downside in any of these levels, it's where the market is right now. But I don't have the overarching context to make strong decisions at those levels. Any questions? Does that make sense? I know it's a bit boring, but sometimes it be like that. And also, if we can get to 200 likes, that would be sick. Our first video at over 17k subs. I think a target that we can meet. You know how it is. Am I low-key Mo? I don't know who Mo is. Which Mo? Do you have facial hair? No. How are you? Nice. I'm good. Halo Crypto. I'm well. How are you? Oh, like Mo? No, I'm not Mo. I've met Mo. I went to Dubai last year and met Mo. So, I mean, I'm not the person that I met. You got glasses there, right? Yes. Did you open the window of your mum's basement today? The window is open in my mum's basement. Any final questions? Maybe market related, if I can be so brazen. Can you do some small coin, like Cake? I think if BSC keeps doing well, Cake is going to benefit from that, generally speaking. People asking about face reveal, etc. I've literally posted my face several times on Twitter. It's not a secret. I mean, it wasn't entirely voluntary. Some weirdo doxed the photo of me from when I was like 12 years old and started posting it as replies to my tweets, which was kind of weird. But I was like, whatever. This is what I look like. It's nothing interesting. A face for radio, or a face only a mother could love. You know, take your bet with that one. Also, in other news, first of all, 12 more likes until 200. That's important. But in slightly more important news, trletter.com, the newsletter that I write with the duck, that comes out tomorrow basically in 24 hours. So if you want the newsletter, 1 email a week, it's free. Also brought to you by Blockfolio, like this live stream. Go sign up. Our last analysis, whatever, was, I mean, the Bitcoin was based what I've argued here. But on the altcoin side of things, we picked Filecoin as being one of the few bullish looking ones. And that was on the 23rd. Where is that? 23rd. Right? And so that went up, even if you take the daily close, and we were a bit before that, 8 p.m. UTC. I mean, that's like, what, one of the better gainers this week from the mid to high-ish caps. So, you know, we get things right from time to time. Last week was one of those rare rare exceptions. So, trletter.com for newsletter stuff. That'd be cool. And also, this Friday, we have another Technical Roundup podcast episode, and it will be with Sam from FTX. So that'll be fun. We'll be sure to ask him difficult questions and interesting questions. You know, no easy rides on our show, but it should hopefully be very, very interesting. And that'll be out on Friday as well. And I should probably mention about the Casual Friday side of things. That's still a thing, especially if we can't get guests for like a podcast episode. We'll just fire up the stream with the Duck or the Duck and a friend to do Casual Friday. But like, if we can get really good guests and get the episodes recorded and uploaded in the same day, then I don't personally see the drawback of doing like 2 live sessions and then a podcast thing on the Friday. But of course, your feedback on that is always welcome, either in the chat, in the comments section, whatever. I think that's all I've got. If the markets get really spicy and we break down from resistance or break towards all-time high, etc., making probably go live again some point in the week. So keep an eye out for that. But generally speaking, newsletter, Duck on Wednesday, podcast with Sam on Friday, all sorts of stuff to look forward to. That's all from me. Thank you to the show sponsor, Blockfolio, blockfolio.com, for the mobile app and some more content in that direction coming your way soon. Yeah, that's it. That's all from me. Hope you had a nice weekend, a fun week ahead. Any type of feedback, either on the news, the charts, whatever, ears always open. Thank you all for helping us breach the 17,000 subscriber milestone threshold. And I'll see you next time. Bye-bye.